Well, here we go. Let's tee up the trading day ahead and bring in our panel. Joining me on set, Strategas Research Partners Chief Market Strategist Chris Verrone and Global X ETF Senior Investment Strategist Seana Smith. Also with me is Henrietta Treyz, who's the co-founder and director of economic policy at Veda Partners. Okay, first, I guess, let's look at energy prices, which seems to dominate the headlines and the market action. On the rise again this morning. And like we've seen the last 3 weeks here, when oil spikes, typically we see equities dropping now, and you've got WTI up almost 3% at 96.05 a barrel. What do you think here, Chris?
Well, I think a couple things. I think number one, you probably don't get some real good durable low in equities until you get crude back into the 75 to 85 range. But let's take a step back. I think the mistake is looking at the energy stocks right here as episodic. If you kind of go back to when they started to improve, it wasn't 2 or 3 weeks ago when this war started. It was back in August, September, October, and it was global. So I think certainly on any positive headline out of Iran, you'd probably see a sell-off in the stocks. I buy them on that weakness. I think what you're seeing is a more structural move to energy leadership. At a 3% weight in the S&P, I think people have to ask themselves, is that enough given what the world looks like?
Shauna?
Yeah, I certainly do agree with that. And I think it's going to be even just so interesting looking at just the macro context of all this. When you talk about the rise in oil prices, what exactly that's going to do inflation, what it does to some of the Fed commentary that we will be getting out tomorrow afternoon. But certainly it is a headline risk, higher oil prices to the market overall. When you just talk about the inflation side of the story, what exactly that is ultimately going to mean for the Fed in terms of the timing of its potential next rate cut. We're seeing that starting to be priced into the market there. And obviously, markets don't like uncertainty, so we're seeing the markets remain a bit on edge.
Henrietta, I know that you're looking at how the pressure on oil is also factoring into political pressure with President Trump.
Yeah, absolutely. And the question really is, at what point does this seep into Congress and make them start to get uncomfortable? You know, those guys are the ones up for election this cycle, not the president. I spent all week on Capitol Hill, and I do not see near-term urgency to strip the president of any of his authority to engage with Iran. I don't see any movement from House Republicans or Senate Republicans to try to reel this back in. I think the president has about 4 weeks now between the next 2 he's going to spend focused on the election legislation and mail-in balloting and totally separate pieces of legislation that he's prioritizing. And then they're on recess for 2 weeks. So really the president has about a 3 or 4 week buffer before he starts to face any domestic pressure from his own conference, which means we should expect this to continue for at least that amount of time, maybe even longer, due to some of the trade benefits he's got coming his way from USTR Greer.
Okay, so now what we're seeing is the president trying to loop in other countries. He clearly says, I want other countries to help me police the Strait of Hormuz and to keep it open for commerce. Yesterday, he announced that he's going to delay his face-to-face with China's Xi Jinping. In fact, here he is at the White House yesterday.
We're speaking to China. I'd love to, but because of the war, I want to be here. I have to be here, I feel. And so we've requested that we delay it a month or so, and I'm looking forward to being with them. We have a very good relationship, but because of the war, there's no tricks to it either. It's not like, oh, gee, I'm waiting. It's very simple. We got a war going on. I think it's important that I be here. You know? So it could be that we delay it a little bit. Not much.
Look, he's also dealing with a partial U.S. government shutdown at home. You've got TSA workers really hit hard, missing paychecks. They haven't even truly recovered from the shutdown before. And then over the weekend, we heard from these airline executives to stop using that industry as a political football. Henrietta, I thought this was really interesting. Sheldon Jacobson, who's an aviation security researcher and professor at the University of Illinois Urbana-Champaign, said the TSA is being held hostage, that basically the Homeland Security Department could allocate funds differently and pay the TSA, but they're not doing it because it provides a great bargaining chip. Is that going to...
Yeah,
go ahead.
Sorry to cut you off, but that's exactly right. The president has a lot of leeway in terms of who he wants to pay when. We've seen that during other shutdowns as well. One of the other pieces of legislation that's out there is obviously ICE is the problem. TSA is not the problem. Customs and Border Patrol is not the problem. So there are pieces of legislation out there that would just say, hey, look, We obviously have a problem with ICE after the shootings in Minnesota. There's escalation in terms of their activities. We want to put some name badges or remove face masks from those agents and have them be treated like other federal agents and police forces. But that so far is not a compromise. I don't see any near-term off-ramp. And so for travelers and investors, what you're looking at is either very high wait times and obviously jet fuel prices at the airline focus, or alternatively, you can drive wherever you're going for spring break and pay, $3.50 a gallon gas. So it's not good options.
What's really incredible here is that the Iran war has already created the biggest global disruption in travel since the pandemic. You've got a lot of concern over rising prices and inflation and what that will do to consumer discretionary spending. So Booking Holdings, Expedia, the cruise lines, the hotels, gambling companies, Seana, all of this bracing for impact.
Exactly, and the impact that is having on the consumer, the erosion that we're starting to see in consumer confidence, consumers' willingness to spend or ability potentially to spend when you talk about just the psychological impact, the higher prices and just that uncertainty that we talked about before is introducing across the market. I think more broadly speaking, especially when it comes to the airline industry, it really highlights the challenges that the industry has ahead of itself. It has the latest when it comes to consumer sentiment or confidence, a potential problem that could stem from some of the longer wait times or delayed flights or whatever happens over the next several weeks. And then also pairing that with the higher oil prices, which has clearly already had a significant impact on a number of these airline stocks. When you have a name like United off more than 20% over the past month, you have a name like American Airlines also significantly moving to the downside.
I want to get to NVIDIA. We saw a modest pop in the stock following the GTC conference, and Jensen Huang predicting $1 trillion in revenue by 2027, tied to just 2 product lines here. Should those stocks, Chris, have moved more?
Well, listen, they've been stuck since October, right? So if you look at NVIDIA in particular, it's really been between 195 and call it 170 for the better part of the last 4 or 5 months. I think when you look at the Mag 7 collectively, we just continue to see more signs of weakening momentum. We see it with Meta, we see it with Amazon, and they're both all very consensus longs here. And the fact that they're not working, I think, raises some concern about, is that the leadership going forward? We don't think it is. I still think it's more about equal weight over big stocks, and certainly NVIDIA and Meta and Amazon, all part of that group.
Did you hear anything that made you think, wow, maybe I should reassess my thesis? I mean, Uber and autonomous driving and video gaming that looks so real, like you're going to the movies.
Our whole process is how did the stocks respond relative to the news, and the news was about as good as it could be, and the stocks didn't go up to any meaningful degree. So I think it tells you a lot's already in these names.
What do you think about NVIDIA now?
I think NVIDIA, it could potentially look attractive. I think it reinforces that there will be also winners elsewhere, kind of similar to what Chris is saying. I think it reinforces the narrative that the AI trade isn't going anywhere. There's certainly going to be specific winners and losers within that space. We might see money, some of that excitement from what was announced yesterday, flow into some of those names that haven't necessarily seen the potential or the significance of the gains of a name like NVIDIA has.
Okay, so you're seeing NVIDIA up 1/4%, but Samsung's up 2.5%. In Asia this morning. Seana, Chris, Henrietta, thank you very much for joining us this morning.